GM, this is Morning Markets. It is Wednesday, the 24th of September. So, what have we been seeing on Bitcoin? Let's start with the 1 hour chart, the low time frames. Since Friday, the 12 and 21 EMA bands had been red all the way. You saw these bands providing resistance, briefly chopping around them here, but overall they could not flip green. Resistance again here, briefly chopped above it, but again rejected. Today we're seeing those bands flip green on the 1 hour. Of course, this is pre-New York session, so always be wary, but what's happened is we've had a sweep that I mentioned in yesterday's video. This found demand. This led to a nice move to the highs of this consolidation here. You then saw another sweep and another sweep. So Bitcoin is finding demand every time it has a sweep of the lows. However, sellers and supply is stepping in at lower highs. And every time it comes into this range at the top of this consolidation, that's where all of the longs who got on board after the sweep should be taking profit, because what's happening here is dumb money. They're getting turbo long at the highs of this consolidation with too much leverage every single time, and they're getting flushed down repeatedly. And the problem there is they're not waiting for any sort of confirmation. And what you need to see is the high of this consolidation actually get broken. So let's say we continue up, form a higher low. If we can flip that level, hold it as support, then that sets up a bullish move today, potentially, within, of course, a higher time frame downtrend. So I think rallies are definitely on the table towards 115. You even have this untapped weekend liquidity at 116k. This is weekend high. Often that is not going to be a very strong level, and whether it's this week or in the coming weeks, it can get targeted very easily. So plan here is simple on Bitcoin. We are in a consolidation within a downtrend. So expectations is for price to reject here and continue going down. And I think if we go down again, we're not going to see another lovely sweep setup, because we've already had 1, 2, 3 sweep setups. So the more time you see something continue to produce a bounce, the more likely it's going to fail, because it becomes consensus. If everyone's now waiting for the sweep, all of a sudden the sweep won't work, and you actually see this break through and continue what we are in, which is a downtrend. It's super simple. A lot of traders, they're going to get messed up because they are simply trying to long a downtrend without confirmation. And if we go back in the charts, take a look at some price history here on BTC. As you can see, when these bands are red, you don't want to be longing, because you continually get a flush down, acts as resistance, flush down, acts as resistance, flush down. Now, when they turn green, now you can look for a potential rally. But bands going green alone is not a good enough signal. What you saw here was this consolidation got flipped into support. Exact same setup. So price came down. It couldn't break down any lower. 1 hour bands flip green. You broke above. You broke above the key high of the consolidation. You held it as support on a few occasions, and you got a nice move up, even though that ended up being overall bearish. And it's a very similar setup here as I just described. You need to see price break above the high of this consolidation and actually hold it on a retest before you can talk about moves higher where you can look to get long. Till then, expect the upper end of this range to lead to a sell-off. That can either come from here with another lower high. That can come from a sweep and we close back inside. That would then trigger a short. And all you have to do is wait for these highly probable setups. And we're going to talk about that heavily today. So setups wise, that's what I'll be looking for regarding a long. But I think the best setups are going to actually come from shorts, either this week or next week. And what you'd want to see is a really inefficient move up into this resistance at that 115K level. See some signs of a reversal. In this scenario, it would be a sweep. You then see the structure break, that market structure, and that's where you can then look for reversals on the way down. You can take your short setup, have a clear invalidation with your stop loss at the highs, and target the inefficiency of this move. If we do get that scenario, that's what I would be looking for. And of course, I'm not saying it's going to reject at 115. That is a level which I would expect it to, since it's a big options level, and coming into 8 a.m. UTC on Friday, that level is going to become more and more important. So I think if we start to get it above it midweek and then we close back below, that can set up a really nice short back down to fill in some of the gaps, especially if price moves up violently and leaves big gaps behind, then it's likely to get filled in. But of course, this could also come from higher. We could be targeting this weekend liquidity. But again, that's fine. Don't have to guess whether price is going to top here or guess whether price is going to top here, because instead of looking for setups to get short on the left side of the V, you can simply wait for confirmations, be it a sweep, be it a failure to return within the overall top, and get short on the right side of the V after the move has happened. So let me explain that. There are 4 types of reversals. You have an exhaustion, which is your V reversal. You have double top, you have a sweep, and you have a failure to return, and vice versa on the long side. Double bottom, sweep, failure to return, and that V reversal. Now, of course, do you have head and shoulder patterns? Yes, but they begin from a sweep. So every reversal in the market is going to look like one of these 4 patterns. And we don't trade V reversals because they are very rare. They happen 1 out of 100 times. And as a trader, a 1 in 100 bet is not a good bet. So we leave them alone and we look for either a double top or bottom, sweep, or failure to return pattern. And we trade on the right side of that move. When I say the right side of the V, you look for your shorts during this leg, during this leg, during this leg. You look for your longs during this leg, during this leg, during this leg. You don't look for longs here, because price could sweep. And that's what I'm trying to talk about here. Instead of setting a limit order right now before you have any confirmation of a reversal, you can wait for that, because if you do just set a limit order short here, where do you put your stop? Does your stop go at the weekend high? That could probably easily get hit, as I said. Then does it go at these highs? Well, the risk to reward becomes pretty poor then, if so. Whereas instead of just blindly shorting, you can wait for price to come up to a level, look for some sort of reversal pattern. This one is a double top / sweep. And after you've seen that pattern play out, you see the market structure break. As I said, that's when you then look to get short. And the reason it's so powerful is because then you know where you're wrong. Stop loss goes at the highs and you can manage risk. Now all of a sudden you have a 1.8R trade. Decent risk to reward. As opposed to just getting short blindly, where your stop loss really has to go above this high here. because the weekend liquidity can easily get targeted, and you only get a 0.5 R win. So you get 3 times less reward. So that's a simple lesson on waiting for price confirmation rather than trying to guess where the top is or guess where the bottom is. And it simply allows you to manage your risk to reward better. So very simple, looking for some sort of topping pattern, whether it's a double top, whether it's a failure to return like this, at any of these key levels, either the weekend liquidity or this 115 OPEX level. So I want to operate in those high risk reward areas. Very simple. And on the flip side, if we do just break down from here, as I said, I think it's likely to then not lead to another sweep setup and actually have a proper breakdown. And again, it's the same. What do you look for? If we start to hit 110, you see a failure to return pattern. You then wait for the structure to break and you can get long here. Entry with your stop loss at either the low here or the low here. Risk is managed. You have favorable risk to reward, can target the liquidity here, and you have a 3.2 R trade. Instead of, again, just longing 110 blindly, where does your stop go? Who knows? Because you got all of this liquidity here. It really has to go at the lows. And instead you only have a 1 R trade, so 3 times less reward. No good, when you can simply just wait for one of these patterns. In that example, it was the failure to return reversal pattern. But until then, until you see a high risk to reward area like 110 or 115 or the weekend high, you have to call it for what it is. This is a consolidation within a downtrend where sellers keep showing up and the trend is your friend. Therefore, you want to operate in those high risk to reward areas only. And if we look at the 4-hour chart, it becomes even clearer. Bands flipped red on Friday. They acted as resistance over here multiple times. They acted as resistance, just front running them over here. And they acted as resistance over here. So price is safe to say is in a low time frame downtrend since we did break this structure. Now, of course, we've come up from an uptrend here. Therefore, when you look at the higher time frame context on the daily, could this all be forming some sort of lower high? Higher low, sorry. Sure. Yes, it could. As I said, you could see Bitcoin form this in September going into Q4, and that can lead to a move to 120. Because on the daily, what do we see? We've lost the daily 12 and 21 bands. If we keep accepting below them, these bands are likely to flip red. So until 115 and those bands are reclaimed, we don't have the signal for a move towards 120k. Instead, we have rejected at the POC. So if you take the volume profile, this is where all the buying and selling has been done in this distribution here. So I took it from the beginning of the distribution to the breakdown. This shows where 70% of the volume is traded. And at the POC, that's where the most volume was traded, and that's where we rejected from. We reclaimed the value area low, we got up to the POC, rejected, lost the value area low, and that's led to the breakdown. So until the value area low around that 115 is reclaimed, which confluences with those daily bands getting reclaimed, the daily at best is neutral, if not bearish, since we have broken down from a distribution with a sweep over here. So while Bitcoin is showing similar price action to last year after its sweep, the bands aren't red yet, and we don't quite have the tariff catalyst, which led to this huge breakdown. At the same time, Bitcoin is void of a bullish catalyst. We've broken down from FOMC, so we had an interest rate cut and Bitcoin is trading lower, which is a bearish sign. People use that as a sell the news event. If you check out my weekly outlook, I said that rate cuts are not likely to be bullish on Bitcoin. And the reason is simple. Bitcoin has performed extremely well during rate cuts rising. Therefore, With rate cuts now falling, and with the fact that we're getting later stage into the cycle, you're seeing actually altcoins have more strength. Now, would it be better if Bitcoin can actually rise to 120k? Yes, of course, because then there's more profits to flow into altcoins. That's really what you want to see here on BTC. But the first place that will be seen will be on the lower time frame. So the 4 hour, you start to see these bands flip green. And on the 1 hour, you start to see us break this consolidation and flip this high, making a move to 115. And then from there, as I said, we're looking for a rejection. And in the bullish scenario, if we're not going to reject 115 and set up some nice shorts, well, you're going to see the opposite. Instead of a sweep and some reversal pattern that I showed you here, you will see this level actually get broken through cleanly and flipped into support. Markets really can be that simple if you let it be. So that's how I'll be playing it on Bitcoin. If we look at something like Ethereum, what we are seeing is price is ranging between the high time frame SR level and the all-time high, playing out as expected. So we're seeing continued Ethereum strength. We still haven't swept the Monday's low, whereas Bitcoin, you can see, keeps on sweeping the lows. So as mentioned, there is altcoin relative strength over Bitcoin. Now, as I've said many times, does that mean the USD chart can't go down? No. Ethereum can outperform Bitcoin to the downside and form a reversal pattern here. This could very much happen where you get that failure to return. You see the market structure get reclaimed and you look for a long over here. In that scenario, you can manage risk, you enter a long, stop loss goes at the lows, and you can trade a move anywhere towards the highs. So that is getting on board this reversal here after that breaks on the right side of the V rather than guessing. And at the same time, Bitcoin could respectively continue a downtrending structure. That is relative outperformance, even though it's on the downside. So while ETH is relatively stronger than Bitcoin, that doesn't mean it's completely out the woods. Again, we just have to now watch for those reversal patterns. So if we flick to something like the 4-hour chart, you're seeing an attempt for a failure to return pattern over here. However, this doesn't get confirmed until we break this structure. So if ETH can actually have a nice move above there, hold it, then I would see Ethereum targeting these weekend highs over here, which are no doubt very weak. And that's where I'd be looking to take profit on any long setups that I find in there. So if you see it hold, consolidate around this level, break out, you can look for a setup, stop loss below this level, and trade it towards that weekend liquidity, which is filling in all of this gap here. That could be a first target and second target weekend highs over here. That's when you then have to reassess and see, are we going to see some sort of reversal on ETH? If we do, get that move higher in the coming weeks. And this, of course, would be a sweep. You then wait for the structure to break. And that, again, is your sweep pattern. So that's how you can play it very simply as a trader. You wait for price to hit these areas of high risk to reward, which isn't anywhere in this gap. It's going to be at key liquidity levels. It's going to be at the high time frame SR level. Areas which have been respected previously. They were previous highs on ETH. If we go to the high time frame chart, you can see this level was set here, respected here, respected here, now respected again, both today and on Monday. So those are the levels you want to look for in terms of your reversal setups, looking for that high risk to reward. And ETH sets up the better long trade. Bitcoin sets up the better short trade if we reach those levels. So that's what I'm looking at. On Ethereum, we are technically in a higher time frame range here, as I said. So you can actually grab a fib tool and look at it from this perspective, where you have a high and a low, which makes your discount zone here and your premium zone here. This has been playing out pretty well so far. As you can see, you got some nice shorts in the premium zone, which over here, so this was Friday the 12th of September. If you went to something like the 1 hour chart, go to Friday the 12th of September, what was this? Saw a sweep, price tried to close above, closed back below, fell down, market structure level was here, so this is the low that led to the high. Soon as this got broken, that is your reversal confirmed, that is your sweep setup confirmed. It's in a high risk to reward area, so it's at the premium zone, which we know is high time frame resistance. Therefore, you can get short once you see the close below the structure level. Stop loss gets managed at the highs, and you can target the mid-range or the discount zone, which set up, of course, a beautiful trade on ETH for 4.84R. And there are even some liquidity targets here for even more reward. So that goes to show a live example of what I mean by how you trade these reversal setups at these high risk reward areas. Now, of course, as I said, could ETH go lower and actually break this range? Yes, if Bitcoin breaks down, then ETH is likely to enter a new range. And the rule I have for that is as soon as you see a close below the 1.2 or the minus 0.2, you're actually more likely to go back into trending conditions than you are sideways ranging. So that's some range trading concepts that you can use, potentially find them useful, and that's what I'll be looking for on Ethereum. If we can put in a reversal here, low time frame, that sets up some decent longs up to at least the weekend liquidity, which is also that mid-range. Barring that, of course, other scenario is lower, where you then just, again, as I said, look for your reversal patterns, look for the market structure break, get long, and you can trade a move to whatever target you put out. That's the simple way to trade. As I said, a lot of people, they'll just blindly long the high time frame SR level, which isn't the most terrible strategy, don't get me wrong. It just means, where do you put your stop? Did you put it here? Did you put it here? Did you put it at these lows? That would have got taken out. It's like you don't have a proper invalidation. But if you actually wait for the reversal, then you put your invalidation at the lows, because again, you're getting long at the right side of the V rather than getting long at the left side of the V and potentially getting stopped out. So that's a quick lesson there on reversals. That's what I'm looking at in the market. Technically, Ethereum is at support here. So if Bitcoin holds up and has a decent move, ETH sets up for the best longs most likely. But shorts wise, I'll be looking at Bitcoin lower time frame if we can hit 115 or the weekend liquidity. Now, when we look at the order flow, what are we seeing? So 1 hour chart on Bitcoin here. Green is the spot CVD, so the market selling on the spot side. That's been persistent, and that has really fueled a lot of this downtrend since the breakdown of 115K. You can see this green line was dropping very steeply. You also had the red line, which is perpetual futures, shorting quite heavily during this period here. So that's why I say, if you start to break out above the consolidation and hold it, that's why it sets up a move to fill in this gap here, because perpetual futures were aggressively shorting over here. So any short, once price gets above this gap, is at risk because their stops are going to be over here or they're going to be at these weekend highs over here, and that can easily get tapped even if it is still bearish. Therefore, it wouldn't surprise me to see a move up to any of these liquidity levels if we can break above the consolidation. But again, that being said, it also wouldn't surprise me if we just sweep above one of these consolidations. If I can find the brush over here. Also wouldn't surprise me just to see a failure and rejection from the high over here with a sweep as we have so far. And again, you just look for your reversal patterns. You see the failure to return with that lower high. Structure breaks, you can get short with your stop at the highs. Because in this morning, pre-New York session, we're seeing this move is mostly led by longs, so perpetual futures. The spot bid is rising slightly, but open interest remains flat, so it looks like perpetual futures longs are trying to squeeze out some shorts here. Anyone shorting in this consolidation after the move is of course at risk if they haven't taken profits during any of these sweeps, which are showing clear demand. Therefore, today you're just watching, can the high of this consolidation break? And then see how high the short squeeze can take it. May only make it to here, may only make it to here. And once it reaches one of these levels, look for your reversal pattern. Very simple. And again, that can be any one of the patterns that I showed you guys. So that's what we're seeing regarding order flow. Spot have been persistently selling, but price has slowed down. It keeps sweeping, so it looks like it wants to squeeze shorts briefly. But overall, looks pretty bearish since this is fueled by spot selling. However, that doesn't mean you can't have squeezes and bounces as we're seeing today. So watch out in the New York session. Let's see what that brings to crypto, and those are the levels for trades. If we take a look at gold quickly, so what we've seen is gold did break out. Told you guys to look for gold to close the daily above this high, and that would set up continuation higher, which is exactly what we saw. So once you get that daily confirmation here, you can flick to your lower time frames, put on something like the bands. 12 and 21 EMA bands, a great trend following indicator. And as soon as you broke above it and closed Monday, you can then look to get long. So if you look, Monday closed over here with a clean breakout. So you expect continuation. You have a look at which trend bands have been supporting price in this breakout. Okay, I see the H1, 12 and 21 EMAs are providing support. So after you get the confirmation, you have everything you need for a trend following long. And that beautiful setup has played out where gold made new highs off of the 12 EMA on the H1. And since then, we've lost the EMAs and we're now chopping and consolidating. So if gold can continue consolidating, that would be good for Bitcoin and probably confluence with a breakout higher to test some of those upper levels and squeeze some shorts out. Looking at stocks, if we go to the daily, we had a down move on Tuesday, but still trading within Monday's candle. So this is really dropping in volatility. You've got an inside candle, which can set up a decent move either way, depending which way it breaks. So I'd be looking for, do we break out from here or do we actually break down from here? And that is going to be the range of Monday's candle to look for the next move on stocks. So if we do move down, then I'll look for something like the daily bands to hold as support, and especially this order block over here. And if we continue higher, then that's the low time frame trend really just taking precedence there, and momentum is going to continue higher until momentum ends. So stock market looks very strong. Gold strong, consolidating on lower time frames. Bitcoin potentially looking for squeezes, and potentially Ethereum here is trying to bottom at the high time frame SR. So whether it is the bottom or not, I'm not sure. Overall moves still look bearish on the daily chart until daily bands are reclaimed. However, if we can squeeze up, there's definitely some targets above in this gap here where perps were shorting hard, where they'll have to close out, and that can fuel a rally. So that's what I'm looking for in terms of crypto. Watch out for your reversal patterns. Understand that risk to reward is all that matters as a trader. So it doesn't matter if you see a reversal pattern here form on Ethereum, and let's say you get long, let's say something forms here for some reason. Stop loss then goes at the low, risk is managed, you can target the highs. That is going to be a 2.49 hour trade, 2.94 hour trade if we targeted Saturday high. That's the exact same as price going lower and forming the same reversal pattern here, where you get that sweep and reclaim, you get long over here, let's say, and your stop goes below this liquidity and you target some higher level. It's still a 2.94 hour trade if you take it up to these highs. And what I'm trying to say there is it doesn't matter what price Ethereum is. Forget about price as a trader. Forget about whether you're getting long at 4.2K or whether you're getting long at 3.9K or getting long at 4.7K. It doesn't matter. What matters is risk to reward, how tight you can get your entry to your invalidation, and that's going to determine how much reward you get out of the trade, because you're here to trade the change in price, not the price number itself as a trader. So shouldn't matter to you whether the bottom's in here, whether we need to go lower. All you need to do as a trader is look for highly probable setups, whether that's a reversal, whether that's trend following, and find a place where you can enter, set an invalidation to manage your risk, and from there, if the risk reward is favorable, then great. If it's not, then you don't take the setup, and it's as simple as that. It doesn't matter what price the chart is at. And that's a really good mindset to shift towards as a trader, because then you don't care if price is pumping or dumping, or if Ethereum breaks 4.1K. You're not looking at it as cheap or expensive. You're just looking at the chart, finding setups and taking them if they have good risk to reward. So that is morning markets. I'll see you guys in the next one.